before we jump into this chart, I do want to state some things. And the first thing is it has been in a downward trend, right? But we have finally seen some recovery here from this support. And before we go into deeper detail here on this chart, I want to welcome all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. And to all my subscribers, welcome back. So in my previous videos, if you haven't already seen them, I'm just here to inform everybody if anybody has overlooked this or missed it. The highest valuation that Apple has reached is 138 and some change. I like to round it down because the cents right now aren't a big deal compared to where we're at and on our way up. But 138, once that gets broken through, and obviously this stock reaches 139 and it uses 138 as support, this could start to see newer highs. But that is the highest valuation pre-split and post-split, right, for this company. So 138 is a pivotal number for the bulls. Anybody watching this for the first time or missed this in my previous videos, write that number down because that's the long-term and short-term number right now that the bulls need a breakthrough, whether they do it in a couple weeks, a couple months, or even till next year. But that is the number that the bulls need a breakthrough so they can see new highs and new resistance levels. From that point, this stock started to reach newer lows. So very important to keep that in mind. Now, every single time, which I circled it in my last videos, right here is one of the times that the bulls broke through the 50-day moving average. This is the second time, and this was the third time, and I said, let's see if the bulls can keep it up and continue the momentum, or will they break through the 50-day moving average? And there you go. The next day, it was broken through, and it hit lows of 104 and 85, and then from that point forward, it has created a support, and the bulls have created momentum, and here we are at 112.44. Now, I spoke about the highest valuation, pre-split and post-split, and I want to talk about the lowest valuation post-split, after the split happened, and that's 103.42. That number, if you just want to round it down or up, 103.50, 103 in general, is the number that the bears are trying to break through, and if that gets broken through, this will see newer lows and newer support levels. So that's a number to keep in mind as well for the next coming weeks, months, or even till next year. So those are the two numbers to see in a broader spectrum, 103 and 138. And now we're going to zoom in here and see what's important for Monday. So the bulls broke through support, through resistance and turned it into a support. They broke through the 50-day moving average beforehand. They went ahead and continued the momentum. And from that point forward, once they broke through resistance and turned it into support, this took off, reaching highs of 112.44. And the resistance level previously that they needed a breakthrough after this recovery and slight dip was 112.43. Excuse me again. 112.43 is the number that the bulls needed a breakthrough, and we could see it here at this point. And from that point forward, the bulls were going to be able to hit newer highs. They actually leveled off there. So the question is, could they continue this momentum Monday? So let's go ahead and see here their new resistance levels after closing and support. And it's pretty broad because from this point, which was the lowest point before the run, they took off. So let's zoom in here and make sure here we got the right points. So it closed off at 112.44 and our resistance is 112.47. It's literally a 3-cent difference. If the bulls can break through that and turn that into a support, they can continue to work their way up to newer highs, further away from the 50-day moving average in an upward direction as they already have. The 50-day moving average is 108.97. Let's see if I can land on that exactly. It's on 98 and 96. But it's 108.97. The 50-day moving average is so important. As long as we're above it, the bulls are in full health. And as soon as we're below it, the bears are starting to gain control. Right now, the bulls have done a great job breaking through resistance, turning into support, and move themselves further away from the 50-day moving average in an upward direction. So they can continue this run They need to break through 112.50, turn that into a support, and they can start to work their way up to newer highs and newer resistance levels. Now, we have here our support, and it's way down here. Now, I wouldn't wait until the support is touched if I'm an investor that's a swing trader or day trader. I would pay very close attention if it breaks through the 50-day moving average, because 108.97 is the first support technically, because once that is broken, we're in bearish territory. But the support level is way down here at 107.70, because that is the lowest point before the run. So if 107.70 gets broken through, not only did the bears break through the 50-day moving average and get into bearish territory, they broke through the first support level that can start to bring this further down away from the 50-day moving average. Now the next support level after that would be way down here at the 104.86 mark. But before getting there, I'd pay very close attention to how this stock reacts if it breaks through the 50-day moving average. Are the bulls trying to reappear and stop the bears by bringing this one back up? Or are the bears tearing it down closer to support? And will the bulls use support to bounce right back up? Or are the bears going to tear through it? If they tear through it, I want to emphasize how important it is to pay close attention to how the stock is reacting. How quickly is it moving down? Is it moving sideways? Are the bulls trying to reappear and bring it back up? Or are the bears just tearing it down to newer lows and newer support levels? That's going to be the most important thing here with this support level of 107.70. Our resistance level needs to be broken at 112.50 by the bulls to continue the momentum and continue to work themselves up to newer highs. Because if they kind of hang out sideways, even if the bears don't appear with strength to tear them down, this 50-day moving average does not stop for anybody, and it will start to catch up, obviously, to the price over time, and it starts to work its way up to the point that if this is just kind of hanging out sideways, at some point the 50-day moving average will just cross it, and now it's in bearish territory. So that's something to keep in mind. So for the bulls to continue their run and continue to maintain momentum, they need to break through resistance, continue to work their way up, use this as support so they can break through new resistance levels and newer highs. As always, if you found this video helpful and informative and it meant you well, don't forget to subscribe. Please do so, but also click on the bell. Don't forget to click on the bell, because by turning on the bell, you turn on all notifications to not miss a single video that I post. Share this with your friends and community. And don't forget to hit the like button and let me know you watched this video. At the end of this video, there's going to be a pop-up video. I highly suggest watching it. If you haven't already had the chance to watch it, click on it. It should pop up soon. It talks about a strategy I've been using even when the market is rising or falling, and it's due to the fact that the Federal Reserve is pumping the market. And the S&P 500, usually on the dates of the pumps, moves up by a couple points. And then that also makes certain ticker symbols in the S&P 500 move by 30 cents all the way up to $3 per share. I know it doesn't sound like a lot, but every cent of profit counts, right? I always say profit is profit. So it's something to take a look at. Check it out. If you haven't already, don't miss out on that information. It's information for us to maximize profits, minimize losses, and also to inform and enlighten every investor and viewer on information that many people aren't talking about, and a lot of investors are overlooking it, and it's literally there. It's scheduled, and if you buy at the right times and sell at the right times, there's an opportunity to make profits. I'm not there to tell you guys to buy, sell, or hold. I'm just here to guys to inform all of you on the great information that there is an opportunity to make profits based off of what's been working for me the past couple of months and based off of what the charts are saying. My best advice is to grab a ticker symbol from the S&P 500 and put the S&P 500 right next to it and see how they both react on the dates of the pumps, so you can do your own due diligence and research, and from there you guys can make your own rational decisions to go ahead and see if you want to stay on the sidelines or if you want to take advantage of the opportunity. Thank you guys so much for watching. and let's make some money.